With the new Income Tax Act 2025 bringing streamlined structures and fresh eligibility rules into play from 1st April 2026, precision is the key. Today, we decode the critical evolving nuances of ITR Form 1 and 2 to ensure seamless filing for the upcoming peak tax season. Happy evening to one and all present here virtually. On behalf of Office of SIRC and Direct Taxes Committee of SIRC, we welcome you to today's webinar on ITR Form 1 and 2. So we have with us today the Chairman of Direct Taxes Committee of SIRC, CA Ayampalayam Venkateshan Arun sir, who is instrumental in formulating this webinar. And we have a lot of webinars in pipeline. And also the session speaker, Dr. CA Gopal Krishna Raju sir. Yeah, hearty welcome to both of you, sir.
Thank you.
Thank you.
We will start today's proceedings with the invocation of ICU.
येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. May I now request the Chairman, Direct Taxes Committee of SIRC of ICA, CA Ayampalayam Venkateshan Arun sir, to give us opening remarks and welcome address. Over to you, sir.
Yeah, thank you, Raman. Good evening, members, and good evening, speakers and officers from SIRC. It is we know that current year there is a lot of changes happened in Income Tax Act. The Income Tax new Income Tax Act implemented from 1/4/2026. So normally we all know about the taxes and other things, but when it comes as a practical, so we only maximum deal with at the time of filing dates we are deal with the forms. So this year the forms are introduced very early. It means we cannot expect due dates extension. So it is it may be the news from the government. It's symbolically they says that we are releasing our forms and on date, so that it is we cannot expect any extension of due dates. But when it comes as a form, there are a lot of changes introduced by the government to in the name of normally every time they says it is going to be simplified, but whenever the new form comes, the new compliances, new changes, everything comes, especially in relating to the due date. There are one additional due date we get this year. Same way, there is an extension of revised return date. So all those things are happened. I think in the meanwhile, while our speaker maybe stress upon those points while taking care what are all the changes happening, what are all the new due dates, what are all the important points to be covered at the time of filing the return. Those things. Apart from this, there is another one point, the validation. So whether while doing if there is any changes in the validation rule, if the validation rules are we are known about that validation rule, normally the error-free processing and error-free filing of forms are possible in income tax. I think the current speaker is well-known speaker, so very well-known speaker in all the subject, especially whenever there is a new act introduced by our Indian government. So the first speaker is our GK Raju sir. So he is well known and having more than the 25, 30 years of experience from the family of chartered accountants. In our place, one of the senior chartered accountants says, even in GK Raju's house, a maid also talking about capital gain tax rules and regulations, everything. So that much of tax is roaming around in his GK Raju's thing. So thank you, sir, accepting our invitation, and also thank our members, those who are all participating. So your participation only encourages to have the many meetings like this. This year, we have, on behalf of Direct Taxes Committee and Indirect Taxes Committee, because chairman of both the committees, we are planning to have few physical meeting as well as the online meetings. So this series of, once the income tax series of online meeting is over, we'll start with the indirect taxes meeting. So as usual, you members definitely to join, encourage us with your participation and get enriched and get clarity on whatever the doubts you have. So we are here to support you and enable this kind of program. Definitely, all those programs will be very helpful for enrich yourself. So happy learning all. Thank you.
Yeah, thank you, Arun sir, for your opening remarks. Let me have the privilege of introducing GKR sir. Yeah, chartered accountant by profession, yeah, teacher by passion, and a thought provoker by position. Dr. C.A. Gopal Krishna Raju, fondly known as Dr. GKR, is the past regional council member of SIRC and one of the most distinguished multi-qualified professionals in the financial fraternity based out of Chennai. He carries over 25 years of extensive experience spanning across corporate governance, taxation, insolvency, financial valuation, and information systems audit. Yeah, fellow member of Institute of Chartered Accountants of India, fellow member of Cost Accountants of India with the All India rank in intermediate examination. Yeah, big round of applause for that. Associate member of Company Secretaries of India, holds a doctorate and master's in management, qualified information system auditor, registered valuer, certified insolvency professional, and the qualification goes on and on. He also holds several postgraduate diplomas. Yes, truly, he's a multi-qualified professional. He's the most sought-after faculty at premier institutions, corporate training hubs, and the top business schools, including IIMs and the Indian Institute of Corporate Affairs. He's a legendary mentor for professionals clearing specialized post-qualification exams like DISA. He has authored several acclaimed books for professional students, including Standard Costing and Variance Analysis, First Lessons in Information Technology, etc. He's a thought leader and a regular writer on technology, on finance and taxation for regional and national level media. He's a regular columnist in Tamil medias like Nanayam Vikadan and Pudhiya Thalaimurai Kalvi. With this brief, I have a great pleasure in presenting before you Dr. GKR sir to take us through ITR Form 1 and 2. Over to you, sir.
Yeah. Thank you very much, Rahman, for the nice introduction. Very good evening, friends. Special thanks to the Regional Council member and past Secretary of SIRC, CAAV Arun G, for being present here and also enabling the members of ICI through Direct Tax Committee, for which CAAV Arun G is the present chairman leading for this particular year. And this year is a turnaround year, especially being, even though the new income tax law has been made applicable for this current year, maybe the practical part will only start from next year onwards, from tax year 27-28. But this year is going to be a very important year. Why? Because this will be the last year with respect to filing of income tax return regularly. But if I tell in Hindi, picture abhi baki hai. The 1961 law will have its ripples continued till 2031 or 2032. That 31-32 will be the last final year of, because your reassessment can be opened up to that. Your ITRU will be there for another 4 more years. So therefore, 1961 law will have its relevance. We are now in 2026. So another 6 years. So we have to carry the 61 law book also, and this side the 25 Act book. But current year, I want to present before you. Rightly, Direct Tax Committee led by CAV Arunji, he has taken these two topics, ITR 1 and ITR 2. For reason number one, uh, he has in his opening remarks, Arunji made one point that government has introduced these forms quite early. When I say quite early, normally they used to introduce on 1st of April. But now, this year they have introduced the notification for ITR 1 and ITR 4 has been brought in the year, on 30th of March 2026 itself. So maybe I'll just share the screen here. Yeah. So hope it is visible. Yes. So it has already been notified on 30th March 2026 itself. So the ITR forms, especially 1 and 4. And later, slowly, they have introduced the other forms. So the form number 2, form number 3, form number 5, 6, and 7. And also ITRU, and also the acknowledgement. But if you go to the site to upload the forms, 1, 2, and 4 are already enabled. I repeat, 1, 2, 4 are already enabled. So the other forms will be enabled. And that is why we have today 1 and 2 we will be discussing in detail. And of course, I am sure you will have questions, queries. You can note it down. You can type in the chat box. And maybe if it is possible, we can even enable your voice also to ask questions. I want to bring before you some of the important changes, especially you have to note it down. This is compared to last year, there has been a change. So your section 139. So this is your 1961 Act. So I'll just keep the references for your purpose here. So this is your 139, and especially the explanation number 2, I just want to bring before you. Okay. So let me take that and show you here. So this is your 139. Yeah, the return of income. So here, the amendment, if you look at explanation number 2, the due date has been made in a tabular format. So very nicely they have brought this table. So which I have actually given it in a non-table format. Okay, so ITR 1 and 2, where the due date will be 31st July. But for 3 and 4, that is business income, non-audit cases. So 31st August 2026. So this part is actually given here. If you look at this, assessee having income from profit and gains of business or profession, whose accounts are not required to be audited under Income Tax Act and also under any other law. Maybe under the Cooperative Societies Act, Societies Registration Act, etc. So that is one. So for them, 31st August. So 31st August is a new entrant. So far, we used to have 31st July as the last date. 31st August is not a date at all. And we'll have the next month, the 30th September for our tax audit return, especially with respect to the TAR, okay, tax audit report. And 1 month later, your October will be the due date for the return filing for the audit cases. So we used to 31st August was not due date at all. Okay, so far. So now this part is new. And please look at this for partnership firms where partners, okay, they have to file their income tax return. So in case partner of a firm whose accounts are not required to be audited under Act. So that means the firm accounts are not audited under Income Tax Act or under any other law. Okay. So then the partner also has to file their return because it is a business income. Okay. So any income from the partnership firm. So 31st August will be the due date. So that is one important change that has been brought out. So number one is your notification has come early. Number two, your due date is okay. So there is a continuous date. So July, August, September is your TAR due date. October is your return due date. November is your TP due date, and 31st December is your belated return due date. And revised return due date has been extended 3 months. Okay, so it is now 31st March. Okay, so we have this due dates change in this current year, so that we need to be very careful. Now, before I venture into the maybe significant changes in ITR 1 and 2, I'll just share. I want to bring before you these two aspects. This ITR 1 validation rules as well as ITR 2 validation rules. Okay. I think rather than the filing of the income tax return, the filling of the income tax return is very, very critical. So especially the errors in filing of return is only because of filling and FILLING. So FILING filing is actually a simple process. So where you validate the return through maybe an OTP or EVC. So some process is only for the validation of the return while filing. So that is actually an uploading process is a simple process. But the actual process is when you fill the data. So ITR filling is actually critical, and we'll actually spend our session in that particular angle. And I just want to bring before you, please look at this particular site here. Yeah. So this is your, I have taken directly from the department site. So your ITR 2 validation rules for 2026, I mean 2026, 27, and also for your ITR validation rules for ITR 1. So these two documents are almost equal to your ITR forms. Okay. And I want to make one observation here that they have classified this validation rule. So my sincere suggestion here is keep these valuation rules and forms next to you. And every time when your memorandum is actually prepared, okay, and your other documents are ready along with the memorandum for keying of the data. Okay, I repeat, for keying of the data. So then you have to actually, I think, have I shared the screen? I
Yeah,
don't know.
that is what, sir. You have to share your screen, sir. I think it is gone.
Sorry. So here I have to, yes. So this is the validation rules I showed you, I was referring to. I'm directly showing from the site itself this validation rule. Actually, if you look at it, ITR 1 form, look at the number of pages, it is 22. But I'll just share with you what is the number of pages for ITR 1. So this is your your ITR 1 for 26, 27 assessment here. So it's hardly 5 pages. So written is only 5 pages. Okay, 5 pages, and look at the kind of inputs, but I'll go into it. But look at the validation rule. It's 22 pages. And this has been brought on 15th of May. And ITR 2 validation rule has been brought on 26th of May. Okay, and I'll focus important rules because it is so big. But I will take at least 5 to 10 important aspects to give you why this is very important. Okay, especially when you prepare the memorandum. For example, I'll take a simple two examples. I'll take maybe ITR 1 one example, ITR 2 one example. Say there is a salaried SSC. Okay, so we very well know that to whom this ITR 1 is applicable. So I will not bore you with all those applicability part of it. Okay, so below 50 lakhs and all this stuff. And so we are all aware about it. Now, of course, that is also part of the validation rule. So applicability. Most importantly, once your memorandum is ready, okay, your memorandum is ready and all the other documents, maybe for detections, and all these other documents are ready, please ensure where you are going to fill it up, and you have to keep, you have to refer this validation rule. Read at least the validation rules once and check with what you are filling up. Okay. So I'm just going to discuss this validation rule summary first. Okay. Then I'll go into the various changes. Okay. So just please look at this. This is your ITR 1 validation rule. This is your ITR 2 validation rule. Okay. I'll come to ITR 1 validation rules. Okay. So the validation process at e-filing CPC, okay, your centralized processing center, is to be carried out in ITR for each defect as categorized below. So, number one, if your ITR is error free, that means it is validated. Processing is so your two columns in your intimation will be same. Okay, so that means you have passed the exam. So every office, because if you give this ITR filling to an SSC, okay, the SSC himself fills it, he will definitely make a mistake. So that's why they come to a professional. Now, as professionals, okay, income tax return filers, okay. So we are all income tax return fillers and filers, okay. So the return filling is actually stage 2, okay. So I will say stage 1, stage 2, stage 3, and the fourth stage is uploading, okay. Oh, then what is this 3 stages? So fourth stage is uploading. Then what is first stage? First stage is actually preparing your data. Okay, for example, computation of income. So it's a table work. So stage 1 is your table work. So you do the table work in your own design. So nobody is going to question you. You want to do it in manually. You want to do it mechanically. You want to use it any method you want to use. You do it. Okay. So that is your stage 1. Stage 1 is actually how do you actually prepare a memorandum. For example, you want to compute the salary income. Oh, compute the salary income. So your ITR 1. So I'll just share you the ITR 1. So this is your ITR 1. This is your ITR 1. This is your ITR. So in your ITR 1, so you have the various, you will be giving the salary income, you will give the property income. Okay. And also there will be other sources. So there are some changes here. I'll refer to that. So these are the 3 items you will fill it up. Okay, good. So now you have a memorandum and you fill it up. Now every field what you fill it up, you need to be careful. So sometimes look at this. Yeah. So look at this. Category A defect. Return will not be allowed to be uploaded. Oh my God. Error message will be displayed. Good. So that means it is filtered at the data entry stage. So good. I'll say category A validation is a good one. So that means it happens at your table. Okay. So what are those defects? Let us see. Okay, I'll just share it with you, and you will be actually experiencing this when you do the filling. Okay, maybe one or two I'll just share. Okay, then I'll go into the main part. So this is your ITR one part. Now, category A actually has 339 errors. Okay, category A has 339 errors. Category B has actually 9 errors. Category D has actually 1 error. Okay. Now, I'll just take you to maybe category A error. Now, look at this. It's actually 339. It's so big. Okay. Maybe I'll just take just one or two to give you, because when you fill up the information, you have to ensure, have this printout with you and go to that number, serial number. Maybe because serial number is 339. Now, when you have the 339 items, so where is it given? So that will be there. So you can use a search to actually go and find out what it is. And nowadays you have various tools also. Okay. So AI tools are there. So you can use a Copilot or you can use a Claude. Okay. So that also actually you can use to ensure whether your data, what you have entered, okay, is actually matching with this validation. So meaning you have to fill up the data, maybe convert to a text or convert to the JSON file. So then you have to use an AI tool to actually do it. So I'm not going to be too technical in doing all this, but I'm only giving you a lead. Okay. So this session is only to uh, let everybody's objective be only one. That whenever we fill an ITR, 1, 2, 3, 4, 5, 6, 7, it should be error free. Okay. Maybe I'll just take only one item. Please look at this. If old tax regime is selected, okay, assessee can claim deduction under TTA to a maximum limit of 10,000. Actually, if you fill any amount above 10,000, it will automatically deduct and it will not permit you to upload. Okay, so these are what we call it as your category A validation. So good. Actually, 339 rules. So you need not worry about this 339 rules. Why? It will not permit you to upload. Okay, so that means you have to only worry about B and D. And how many errors? Only 10 errors. B has only 9 errors. D has only 1 error. So that means only 10 errors. So you have to be only careful with this 10 errors. So what is this 9 plus 1? Now let us see this. Written data will be allowed to be uploaded. My God, with error it is uploading. So then processing will have an issue. So, but the taxpayer uploading the return will be informed of a possible defect present in the return under 139.9. Appropriate notices or communication will be issued by CBC. So you can avoid this. This generally this is one aspect. Any error that happens, you do a rectification of it. Is it involved? Is it involvement of professional time? Actually, yes. Point number two, are you charging this? Are you charging for the client for this services? Is a very fundamental question. And I will tell you that out of 100 professionals, so it is 90 plus, 95 plus professionals, we don't charge. Okay. They don't charge for this particular service. Okay. So actually, this is also a professional time. So we have to be very careful with this. So return data will be uploaded by the taxpayer. Uploading the return will be informed of a possible defect present in the return. Now I'll take you some 4 or 5. Okay. So let us take some issues like this. Please look at this. So this is your IDR 1. Okay. So I'll just take some few one, like maybe B. This is your B. So B, you have actually 9. Look at this 9. Now, what is this? It will be uploaded. What they say? Return data will be uploaded, but it will be informed of a possible defect. Okay. So you have to rectify it. So appropriate notices will be informed of possible defect present in the return. So you have to file a rectified return. Okay. Now please take this example. Maybe I'll just take one or two. Okay. Say it can be a TDS related. Okay. Look at this. TDS deducted value in scheduled TDS cannot be more than the value in the scheduled salary, total gross salary. Or maybe you can take things like this. TDS section code 194B, 194BB, BA, IA, IC, LAR 194S is selected under schedule TDS2, details of TDS on income other than salary, and field 2A, section under TDS is done. Or the assessee having income under special rate is not eligible to file ITR 1. So this is where people may do a mistake. Now come to this. Coding of Aadhaar in ITR is required as per 139AA in applicable cases. And also linking of PAN and Aadhaar is required to avoid consequences of not linking PAN and Aadhaar eligible cases as per it has to be done. Okay. So if it is not done, it will upload, but it will say it is a defective return. Okay, so all this. Now come to this category D simple. Assessee has claimed relief under 89(1). Okay, he puts that value there without furnishing Form 10E. So now what will happen to category D? Look at category D. Return data will be allowed to be uploaded, but the taxpayer uploading the return will be informed of a possibility of some of the deduction or claim not to be allowed or entertained unless the return is accompanied by the respective claim forms. Actually, if you go to ITR 2, more such list is there. Okay, look at ITR 2. It is A and D. D is more. Actually, B is not there. Okay. And you know how many A items are there? 764. Okay, 764 A items. That means your return will not be allowed to be uploaded. So you have an inbuilt validation at the data entry level. I repeat, inbuilt validation at the data entry level. So for your information, your ITR 1 has 339 inbuilt validation. ITR 2 has actually 764 inbuilt validation. So put together, it's almost 1103 inbuilt validation, which will not permit you to upload. Oh, very good. Now come to D. How many? 26. I think if you focus on this 26 is sufficient, because 26 only we will have a day, your return with an error it will upload. So return data will be allowed to be uploaded, but the taxpayer uploading the return will be informed of a possibility of deduction or claim not to be allowed because it doesn't accompanied with the respective claim forms or particulars. Okay, so I'll just give you that list, maybe one or two. Okay, so this validation rule is very, very significant, and maybe as a training. Okay, now you have 1103 validation rules which will be filtered at the uploading stage itself. Okay, will not allowed to be uploaded. So that means how much of errors, and over a period of time. I must tell you that this is validation rule for assessment year 26-27. Please go to validation rules for 25-26. Okay, 24-25 assessment year, 23-24 assessment year. These numbers were less. Okay, so ITR 1 339, ITR 2 764. These were numbers were less. So that means over a period of time, the department is also strengthening the validation mechanisms. Okay, now I'll just share with you this D part. Okay, so please look at this. This is ITR 2 validation rules. So it is actually 51 pages. Okay, 51 pages. And please look at ITR 2. This is your ITR 2 for 26-27. It's actually, form itself is 34 page. Okay, ITR form is 34 page, but the validation rules are 51 page. Okay, so quite exhaustive. And look at the category, this is A and D. Look at this. So it starts from the general. Okay, whether this return is being filed by representative, if selected as, then details should be provided. So you say yes and you don't provide the 3 details because that is new. Okay, then it is a defective. Okay, and it will not allow you to upload. So these are all already inbuilt. So quite detailed 764 validation. Aram se read this and maybe during the discussion I'll show you a few parts. Now come to this 26 validation rules. Ah, okay, category D rule. Okay, how many? You have 26. Okay, look at this. Current year losses. Okay, current year short-term capital loss. Okay, and long-term capital loss should not be more than zero if return is filed under 139.4. Okay, why? It will not permit you. It will not actually, it is actually defective. Why? Unless and otherwise you file the return on time, the return can be carried forward. I mean, the loss can be carried forward. So therefore, it is a defective. So you are not allowed to actually carry forward. Okay. So current year losses should not be okay uh, more than zero if return is filed under 139.4. Okay. Now I will come to maybe another one. Look at this 18th part. Okay. If the moment you say resident, okay, because this is your assessment here. I'll just select one assessment. This is 2627 ITR 2. Okay, look at this ITR 2. Here you select your resident. Okay. So residential status. So you select the residential status. It's here. So now, the moment you select the residential status, okay, now come here. So for resident taxpayers, DTA benefit is not available. And the claim may not be allowed. Please recheck the claims made. So you are resident, but you are claiming DTA. How is it possible? Okay, so therefore it will upload, but it is an error. So you have to be very careful when. So a lot of connectors there. So where and all it will permit you to, it will not permit you to upload. So that means you have to rectify it. Okay. So 764 are good items. Okay. So they are all good people. And you have 26 people who are bad people. So you have to be very careful with this 26 entries. So therefore, my suggestion here is, so whenever there is a uploading of the return, I'm sorry, I think I'm here. Whenever you are uploading the return, okay, so please ensure that the filling, the ITR, once it is filled up, so person one should do the filling, person two should do the verification of that filled data. Now, whenever you does the verification, so how will you does the verification? From mind. Okay, ticket, ticket, okay. So that is not verification. So you do the validation as mentioned in the rule, and please ensure whether the 26 errors are possible in ITR 2 and that 9 plus 1, 10 errors are possible in ITR 1. Okay, so this is fundamental, and please keep this in mind when you do the filling. Now I'm taking you to the main changes. Okay, and friends, wherever you feel you need to actually uh, add your questions, please put forth your questions in the chat box, and maybe you can even raise your hand also. So after the session, maybe we are now at 4:40 or 4:42. Another maybe half an hour to 40 minutes, we'll have a detailed on the various changes that has been brought out, and then we will go for the question and answers. Okay, so whatever questions you have, kindly note it down. So I'll try to give. Now, please look at this main change, introduction of secondary address. So maybe I'll just share with you. This is ITR 2 for 2627. Okay, please look at this address. Okay, so your address to be provided for communication purpose. They are asking primary address and secondary address. Okay, so this is changed in all ITRs. Okay, so this is your ITR 2, and I'm taking you to your ITR 2. This is 2526 ITR. So look at your previous year ITR. Okay, in previous year ITR, look at the address. Flat, name, road, street, area, locality, town, city. That's all. So bit by bit it was there. Okay, only one address. Okay. So an ITR2, this is for 25, 26. Okay. So now this is 26, 27 assessment here. Look at the address to be provided for communication purpose. You have to give primary address as well as secondary address. So two address you have to give. And not only this, you have to give the primary email, secondary email, primary mobile number, secondary mobile number. Okay. So address primary, secondary, and mobile primary, secondary, email primary, secondary. Okay. Now, is it mandatory if you ask me? Okay, is this question? Now again, I'll ask you to go to the rules. Okay, and even an ITR rule is also ITR one is also same. So maybe I'll just take you to this ITR one. Okay, so we have this 339. Okay, so here I'll just take you to the validation rules A. Okay, so here I'm taking you to that TTA and all this. I'll just take you to the address part. Okay. Look at this. 338, 339. These are the last two. Okay. Secondary address and schedule, part A, general information is mandatory to be provided. Without this, you upload it, it will not upload. No, I don't have a secondary address. Now you can ask me a question. Can both the address be same? My view. So we are actually trying this and it is working. Okay, both address can be same. Okay. Now I'll because 330 doesn't speak about it. Now come to 339. Secondary address should not be same as primary address. Okay, please important. If no is mentioned for, is the secondary address same as primary address? Okay, please. Now actually come to this part. This is your so address to be provided. Now they will ask secondary address is same as primary address. Yes means it will copy. The moment you say no, you have to give a different address. The same address if you type it, it will not permit you to upload. Okay, so quite interesting. Actually, this was not there, so that means this validation was not there last year. So last year validation rule, current year validation rule, if you look at it, a lot of change will be there. So one by one, you have to, and it's 339, guys. Okay, go through Aram se. I'm not, but as and when we discuss it, I'll share with you those different validation rules also. Okay, now come here. Yes. So introduction of the secondary address. So it is mandatory. Okay. So and maybe if you make a same address means you have to select yes. If the moment you say no, you have to give a different address. Now this is another different change. Rationalization. Actually, when you have witnessed the budget speech of our honorable finance minister, Madam would have mentioned two words. One is simplification, another is rationalization. Okay, so this rationalization is with respect to the detailed sort of the representative SSC. I'll just share with, well, please look at this details here. I'll just take you to ITR2. And here the representative SSC, look at this. Whether this return is being filed by representative S. Look at it, name, who is that? So, for example, I'm filing it for, it can be for a senior citizen or for a non-resident, okay? So, some relative. Then I can say name or representative SSC, my name, okay? My email ID, my contact number, okay? So, this I have to give. So, these three. But just look at the previous, this ITR2, okay? So, look at your representative, whether it's written filed by representative. So name, I have to give address, PAN or Aadhaar. Okay, so now PAN or Aadhaar is not required. Capacity is not required. Capacity of the representative, friend, relative, mother, father, son, daughter, some. Okay, so something you have to give capacity of the representative, and drop down is provided. So within that only you have to select. And of course, there are certain places they give others. So I'll just come to the this is your ITR 2 rules. I'll just take you to the representative assessee part. Okay. So representative. Look at this. In part A general, okay. So name of the representative, email ID of the representative, contact number are mandatory. Okay. If in part verification capacity, select a representative from drop down. So this is with respect to the representative. Whether this return is being filed by representative assessee, flag is yes, then details should be provided. No means you need not give the three details. Okay. So always please use the validation rule, refer the validation rule. Okay. So, and keep your validation rule as part of your ITR. Okay. Very, very important. Very, very important. And especially, I will repeat this. I will repeat this because we are all chartered accountants and in our auditing, because any student of auditing, you take any books of auditing, there is a concept called maker and checker. Okay, ITR, we have to apply this maker and checker concept. Okay, so maker is the guy who will be the ITR filler. Okay, he will fill the form. Okay, you are not supposed to, and he doesn't validate it. So ITR filler. Okay, so there will be a ITR preparer. He can prepare in any form from the file kacha data. He will prepare it in some manual method or mechanical method, put it in Excel sheet, whatever computation he will do, put it in and then. So he is a written preparer, written filler. Okay, based on the data. So in office, okay, there should be three different guys. One is a written preparer. Second is a written filler. Okay. The third guy is the validator. Okay. And when he validates the return, okay, so it's called a verification. So verification or validation. That validator should keep the ITR validation rules with them. Okay. So properly. Okay. So that has to be done. And 99.99% your validation rules takes care, but better to keep it. Okay. And that will actually help you to do the check the validation properly. And most importantly, please do that for ITR 1, 9 plus 1, 10 validation. And for ITR 2, 26 validation. Mandatory. And check whether this 26 applies. So when you look at the validation rule and we look at the computation or the memorandum, you yourself will know, okay, item number 10 is applicable, item number 17 is applicable. So let us be careful here whether properly it has been filled up. Okay. So you have to note down this very clearly. Okay. So that's your representative assessee part. Now I'm taking you to this removal of the field seeking reporting of foreign retirement account in ITR 1 and ITR 4. Actually, ITR 1 alone I will take. Okay, so I'll just take your old ITR. That means your previous year ITR 1. So this is your previous year ITR 1. Okay. So your previous year ITR 1, that is your assessment year 25-26. So here in the income from other sources, please look at this. Okay. So drop down like you will have interest from savings account, interest from deposit account. Okay. Then you will have income from retirement benefit account maintained in a notified country under 89A of the Income Tax Act. Okay. Now, actually, ITR 1 is for individuals being resident. Okay. Having total income up to 50 lakhs. Okay. So that is your ITR 1. Now, I am bringing your attention to section 89A. Okay. Or I'll just share with you that 89A, which are, this is your 89A notified. I'll just show you that section. Okay. So this is your 89 capital A. Look at this. This is your section. So relief from taxation in income from retirement benefit account maintained in a notified country. Now, what is this? Currently, you are resident, but let us assume that for past 30 years, you have been working in Australia, maybe as a university professor. So you worked there and you came back to India and settled here. Now you have a retirement account, a foreign retirement account, where a specified person. Okay. Now, who's a specified person? Means an account maintained in a notified country. Now, what is notified country? Canada is a notified country. USA is a notified country. UK is a notified country. Okay. As per 89A, this is section 89A. So the notified country is by the Gazette. So these are the three notified countries. So now Australia doesn't come under this. So that means you have worked in Canada and you have come back. You worked in USA, you have come back. Worked in UK, you have come back. Okay. So specified account means an account maintained in a notified country by a specified person. Okay. That means he came back. Okay. In respect of retirement benefits, it's not taxable on accrual basis, but it's only on withdrawal basis. So then that is so that means it is accrued there, but not taxable. So only when you withdraw on cash basis taxable. So that is the concept of this 89A. Okay, so now what they have done, so this is your 25-26. I'll now take you to 26-27. So look at this 26-27 ITR1. I'll just show you that. This is ITR1 26-27. Now here they have not included that. Look at this. So drop down like interest from savings account, deposit, etc. So that foreign retirement account is not included. They have removed it. So what does that mean? So the moment you have a foreign source or a foreign asset, ITR 1 is not applicable. You have to go to ITR 2 because in ITR 2 you have a separate schedule. Okay. So the FA, schedule FA. So let me take you to ITR 2. In ITR 2 you have a schedule FA. So that schedule FA you have to fill it up. Okay. So let me show you. This is schedule FA. This is your schedule FA. So it is in the last one. I'll just take. This is your schedule FA. So when in schedule FA, you have to give the details of the foreign assets as well as foreign income. So for residents. So therefore, this duplication is removed. ITR 1 is removed. Now come here. So 89A offers resident individuals the option to defer payment of tax. So what do you mean by option? That means you can pay the tax on accrual basis because it is accrued in foreign country. Or no, I will not pay on accrual basis because I have not received money in my pocket. I'll pay only when I receive it. So that option is available on income from foreign retirement benefit accounts from the year it is earned to the year it is withdrawn. This option you have to file form number 10E electronically. Okay, so the income must be reported on ITR forms applicable to an individual. So now you have to only report it in the respective. Please look at this. It is considered foreign source income. And taxpayers holding foreign assets or earning foreign income are not eligible to file ITR 1 or ITR 4. So now it is only ITR 2. So in that, they will do that. So please be careful about this one particular aspect. Okay. Now I'll take you to the next one. Okay. So till last year. Okay. So this was not there. Maybe I'll show you the. This is your ITR 2 for 25-26. Okay. So look at your schedule. I mean, 80G, you should look at this. This is 80G. Now, any donation, guys, you have to, who is the donee? Okay. Pan of the donee. Okay. So, and donations entitled. Okay. Now look at this amount of the donation. Okay. So, in cash, other more total donation, eligible amount of donation. Now come to this part. Okay. This is your ITR to 26-27. So I'll take you to ADG. Look at ADG. This is your ADG, which says, along with the pan of the donee cash eligible amount, look at the two columns. TR and transaction reference number, IFC of the bank. My goodness. Okay, so this is new actually. Okay, I'll just show you this. Please read this. So 80G of the ITR Form seeks disclosure in respect of deductions claimed for donations made to the funds, charitable institutions under 80G. So this schedules request taxpayer to provide all details. Okay. Now current year onwards, you have to give the bank details. Now, of course, if it is cash, you may ask a question. So up to 2000, you are eligible. Okay. So if the maybe you can say that donation in cash 2000. So in cash means you need not fill it up because up to 2000 is eligible. Okay, under ADG. So any other mode means you have to say. So that means bank. So in cash, in bank. Okay. So that's very important. Okay. So now there is one more interesting question. How about donations in kind? Whether you are eligible for ADG? Answer is no. Because section very clearly mentions. Any payment. Okay. I'll just share with you that section also parallelly. Okay. So have the section always with you so that you are clear with. This is 80I GHI. So I'll take you to the G part. So this is H, all the old sections are there. I'll take you to G. This is your 80G. Look at G part. This GG. So this is your 80G. So look at the 80G. So JDG, in computing total, there shall be deduct in accordance with. Okay. So please look at this. Sum paid by the assessee. So that's why the donations in kind will not come. Okay, so you have to be very careful. Okay, so when we use this, so we are now in ITR 2. Oh, this is your old ITR where no TRN. Now this is your new ITR where you have to give the TRN IFSC. So very simple. So current year, whenever there is an 80G data, so all these years you were used to take the receipts and PAN number. Okay, so all this stuff you will be taking. Okay, so now you should have a cash bank. Now the moment it is bank. Okay, so last year you need not give these two. So now the moment you are filling this column, donations in other mode. Okay, you have to give these two columns. So now I'll take you to the what do you say? The validation rules. Okay, please look at the validation rule. Okay, very interesting rule. So this is your ITR 2. Okay, so donation. Look at the ADG. The whole tax regime is selected. Then in 80G, donation should be equal to sum of the donation, all this stuff. Schedule 6 claimed is more than the eligible amount. So the transaction reference number. Look at this. IFSC and transaction reference number for UPI transfer or check number, okay, reference number in Schedule 80G is mandatory in the case donation is in mode other than cash. I told you, no, cash you fill it up, of course. Cash you say 2,500, only 2,000 is eligible. Beyond that, not eligible. Okay. So this and all, so that validation rule is, and of course it is the moment you don't type it, it will not upload. Okay, so these are all internal filters. Now, external filters is where you have to be careful. Okay, so that 9 plus 1, 10, and ITR 2, 26. Because this will go with errors. Okay, the moment you go with error, you have you have to get the notices. So it's a painful process. So you could have actually avoided it. Okay, better to avoid. So now come here. So now this is your 80G. Now come to 80GGC. So this is, I'll again come to this. This is 2006. Now look at 80GGC. So previously, details of contribution made to political party. I'll just take you to the old one. GGC. Last time you had this transaction reference number for political party, IFSC code, but ADG didn't have. But political party, you have to give the transaction reference IFSC code. Current year, political party also you have to give, donation also you have to give. Okay. Now, amount of contribution in cash in kind, amount that's a bank. But look at this. You have to now give the name of the political party. Okay. So whether it is a central political party or state political party, PAN of the political party. So in addition to TRN and IFSC, TRN also you have to give, IFSC you have to give. That continues from last year. Okay. Current year you have to give name of the political party. So come here. So in GGC you have to give the name of the political party, PAN of the political party. So which is actually interesting. Okay. So now all these are very quite interesting. So we have very good questions that is coming up. So I'll take all these questions one by one. Okay. So I think people are actually sharing many inputs. I'll request kindly please don't share the personal informations and all in the screenshot. You can ask this as part of the okay questions. Okay, good. Now please come here. Let us take the next one. Okay. So we have some very interesting question that is coming up. Maybe I'll try to complete it then and there. Okay. So a salaried personnel holding bitcoins, cryptocurrency, stocks in NSC will qualify for foreign assets and ITR 2 will be applicable. Actually, no. So he's holding bitcoins. Okay. So cryptocurrency, stocks in NSE, cryptocurrency is different. Okay. Stocks in NSE and will qualify foreign assets. Now, where he is holding? Okay. So unless and otherwise he is holding the assets outside India. Okay. So then only it will come. So just because he is holding a crypto account and you have a lot of desi exchanges as far as crypto is concerned, and you have a separate schedule for VDA. Okay. So cryptocurrency, you have a separate schedule. Okay. Stocks, you have a separate schedule. Unless and otherwise, these accounts are foreign accounts. Okay. So please be careful. What happens if the donation is paid by credit card? Okay. So Naresh Kimani is asking question. Okay. The donation is also an I think Tyagarajan is answering this question. I think different question. I don't understand what happens if you are answering some question or what? Donation is paid by credit card, also an electronic transfer. Okay, I think he's answering.
Sir is answering for this
Okay.
previous
Sorry.
query.
Right. Sorry.
So
Right.
he says
All
even
these are
though it is
answered.
transferred through credit card, it is amounts to electronic
Right.
transfer only. Like
Right.
that is.
Right. So I think he is not answering. He is answering question, not asking. Okay. Thank you. Check. I think all the questions are answered now. So 80 GGC, you have this change. Apart from that, there is no change. So therefore, please be careful. So 80G is actually been inspired by 80 GGC only. Okay. So slowly they are asking more and more inputs, more and more data. Okay. So that is the catch. Now come to the next part. So this is new actually. Reporting of the fee for furnishing the revised return of income. Now, I made this point at the beginning that please look at this. You have this revised return. You can file up to 31st March 2027. Now, when you can file a revised return? You can file a revised return only you have filed your original return. Okay. So now you have filed your original return on time. Okay. Now you want to file a revised return. Now, till last assessment year, the time limit for belated return and revised return both were same. Now, this assessment year, 26-27, for financial year 25-26, the date for belated return is 31st December. So, for which you will have a separate late fee. Okay. Same 5,000, okay, it will be there for belated. Now, revised return and belated return both used to be the same due date. Now the due date is actually extended. Okay. So from 31st December, they have now extended to 31st March. Now for that, you have to file a separate. Now you file the revised return. Okay. So you have to actually give the exact 234I number. Now 234I is actually, I'll just show you that part here. So this is your 26-27. So in 26, 27, please look at 234. Okay, look at this. This is the interest and fee payable. So your 234F is for your belated. This is for revised return of income. Okay. So 234I. This was missing in last, I'll show you that 25, 26. So this is your 25, 26, 234. Look at this. So you didn't have 234I here. This is actually a recent addition. So it is only applicable from this assessment year. So it was only ABCD till last year. DA is recently introduced. So this fee is same as your 234F, same 5,000 and 1,000. Please look at this number here. Your fee is same 5,000 rupees if it doesn't exceed 5 lakhs. And for others, once you exceed 5 lakhs, it is 5,000 rupees. Okay. So you have to report it separately. So from Finance Act 2006, they've extended the time limit of filing the revised return from 9 months to 12 months from the end of the relevant tax year. So that means from 31st December, it has been extended. So this extension allowed taxpayer to revise the return even if a belated return was filed at the end of the permissible period. This extended period to file a revised return is applicable only upon payment of an additional fee, which is as follows. Okay. Now, I want to make one observation here. This extended period means from January, February, March. I repeat, January, February, March. So please look at this form. I will make this again. Fee for default in furnishing return of income. Fee for furnishing revised return of income when you make it in the year, in the month from January, February, March. So only for January, February, March, it will be enabled. I will just share with you the this is your validation rule. Please take the validation rule for 234. 234. Total interest. I think that's very simple. They have not mentioned any because it's direct. The moment you cross that particular date, automatically that amount will be filled up in that particular. So therefore, yourself filling up, voluntarily filling up the 1,000 and 5,000 doesn't matter here. So therefore, this validation is a simple validation. Okay, good. Now come to the next one. This is actually this was there till last year. Okay, because 23rd of July 2024, there was an amendment, and the amendment made it very clear that any purchases made after that and sale is made, the indexation is not applicable. Purchases made before 23rd July, sold after 23rd July. Purchases made before 23rd July, sold before 23rd July. You are eligible for the indexation. You need not go for the 12.5% rate. So therefore, the financial year 24-25. Okay, now we are in financial year 25-26. Financial year 24-25 had a very critical scenario. Why? Till 22nd of July 2024, the indexation is eligible. So any transfer happened till 22nd of July, indexation is eligible and the tax rate is 20%. Any transfer happened after, on or after 23rd of July, indexation not applicable and tax rate is 12.5%. But in case indexation, you do the calculation and the tax on that 20% is lesser than 12.5%, the excess will be ignored. So therefore, that bifurcation of transaction before 23rd July and from 23rd July onwards was significant. Okay. So now that date is now previous. So current year, it's very simple. So any asset purchased before 23rd July For computation purpose alone, we will take that indexation, check whether tax at 20% is lesser than 12.5%. Then we'll give that it is actually we have to exclude that. So that portion alone will be there. So I'll just share with you that particular form. So I'll take you to the this is actually 2627 ITR2. Okay. So I'll take you to the capital gains. So this is your capital gains part. So here, I'll take you to the long-term capital gains, especially this is short-term. Maybe I'll take you to the long-term capital gains. Okay. So here you will have only one line. Please look at this. So look at this part. Applicable for residents for computational purpose. Okay. So ignored. Look at this. Applicable and it is actually to be ignored. Okay. So long-term capital gains. So applicable for residents and the second browser where acquisition is before, only for the purpose of computing. In case a negative, consider as nil. Now please look at this. There is a word called tax computed is only for the excess amount to be ignored. Okay. Now, in the previous ITR, you will have the computation done till 22nd July and computation done from 23rd July and onwards. So, the form was much bigger, much bigger. Okay, I'll just share with you that particular form. It was quite very detailed form. Okay. And this is ITR2. So please look at that particular part here, quite detailed. So now they have removed it. Thanks for that. Look at the long-term capital gains part. So this is your long-term capital gains. Yes, the long-term capital gains. Now please look at this. So for transfers before, for transfers after, this difference is not there. Okay, so this A and B. Okay, look at this for sale of land and building, data by the full value of consideration, deduction, cost of acquisition, and cost of acquisition with indexation, and for the purpose. So this A and B was not, now is not. Now look at this. Look at cost of acquisition. This is the part. Applicable. So before and after, that part is not there. Okay. So where acquisition is only made before, I'll take this. So please look at this. Transfers before 23rd July, residence for computational purpose. This alone is considered. This part is not there. So AB is not there. Okay. So that is where we have this. So the new ITR form, the dual reporting has been removed. As the rate change was relevant only for the transitional period for the previous year 24-25. No such mid-year change existed for the financial year 25-26. For assessment year 26-27, this part is removed. Okay. So we actually expected this change last year itself. Okay. So this is your 25-26 ITR. This is your 26-27 ITR. So 26-27 ITR number of pages is actually, please look at this. So this is your, it was actually 39 page. Okay. Your previous ITR. Now this is actually 34 page. 5 pages less actually. So last year ITR was 5 page more. Okay. It was only because of provisions like this. So now I'll take you to the next one. Okay. So maybe I'll take one more change that has been brought out. Separate reporting is required for certain interest income. Okay. Taxable at a concessional rate of 9%. Okay. So this is only applicable for section 194 LC. Okay. That section provides that an Indian company business trust is required to deduct TDS on interest paid to non-resident in respect of borrowing made in foreign currency, infrastructure bonds or rupee denominated bonds at a concessional TDS rate of 9%. So therefore, the concessional TDS rate of 9% applies to interest payable on long-term bonds issued on or after 1st July 2023 and listed on the recognized stock exchange in IFSC subject to applicable surcharge. So this alone you have to show it as a separate line item. Okay, that interest income. So in the new ITR form, a column has been introduced in Schedule OS to capture such interest income specifically. This change will facilitate matching with TDS credits because this is a concessional TDS. Okay, 9%. Because in IFSC, especially Gift City, there is no concept called zero tax rate. It is a minimum tax rate. Okay, so to keep uh, at par with the global minimum tax rates. Okay, so they have kept it at 9%. So therefore, that interest income alone, you have to show it as a separate line item. Actually, if you look at that form, you will feel the the datas are much detailed. I'll just show you this ITR 22627. Look at the income from other sources. So this is your uh, uh, income from other sources. In that to the interest part. Okay, other sources. Look at this part. So this is your interest part. And look at the various breakups what they have given. My God. So from savings account, from deposits, from income tax refund, for pass-through income, interest earned on contribution, 1, 11, 12, 13, others, okay, including interest from companies, NBFCs and HFCs. Okay. So especially 194 LC. Okay. So I'll just give you the this is your ITR 2 validation rule. This is ITR 1, ITR 2. So 194 LC. Okay. So this is your interest. I'll show you that interest part alone. You have to show it separately. Okay. Few things I'll just show you maybe. Since it is separate, because it is only to match with your TDS. Okay. So I think that is not forming part of your, okay, good. So all others are in other ITRs. So I will keep this discussion separately. Maybe this ITR 2 I can keep it. I think this one I just now discussed. Reporting on interest income from companies, NBFCs and housing finance companies separately. This is what I discussed here. Look at this part. This is your ITR. Okay. So others. So look at the 9 items. So your interest income you have to bifurcate into different because for deposits and savings bank you will be eligible for the 80 TTA and TTB deductions and income tax refund separately. So this particular number will be compared with your respective income tax refund and will form part of your 26 years and annual information statement. So each of this data, there is a back end to actually compare, to actually validate it. So each of this input data. Now, point to be noted, Madam was actually making a reference of rationalization and simplification. Along with that, third point also was referred. What is that? That the ITR will be pre-filled. Okay, ITR will be pre-filled. So all these data are already there in the banking system. Income tax refund interest is already there in the system. Okay. So other interest incomes received from companies, NBFCs are already declared in 26 AS. So only aspect is you are going to classify it into the various fields here. So thereby at the back end, the data are already verifiable, okay, or it can be validated. So that is the catch here. So the new ITR form clarify that interest earned from companies, non-banking finance companies, housing finance companies shall be reported under others. Okay. Well, other interest income for instruments fixed up a debenture with such entities required to disclose Schedule OS where assessee is not engaged in the business of money lending. So to that extent, they have given the breakup. Okay. So quite a detailed one. So any other income, you have to specify the nature. Okay. So, guys, I'll leave the floor open for questions here. We have some good number of questions.
Uh,
Maybe,
Yes, sir. Sir, actually, the question is the first question itself. The salaried person holding bitcoins and cryptocurrency or stocks in the New York Stock Exchange will qualify for the foreign asset ITR 2. This is the question, is the first question, sir. So
okay.
there is
Let me answer this question first.
Sir, let me complete the question, sir. Sir, in this question, there are two things. Bitcoin and cryptocurrency is one thing. Stocks held in New York Stock Exchange is the another thing. So which one is qualifying for the foreign assets, sir?
Okay, point number one. There is a schedule called Schedule FA. Now, Schedule FA is only applicable for those who are residents here and they have a foreign assets outside India. The moment you say foreign assets, what is a foreign asset? Now, let me take an example. Now, I want to trade, I want to invest in Indian stock market. Then I need a bank account in India. I need a depository account in India. I need a DP account because I need to keep my stocks in dematerialized form. Very similar to that, close your eyes and then transport yourself to a foreign country. Say, for example, in New York Stock Exchange, for certain stocks you want to. Now, Gopal, Krishna, Raju, myself, I want to invest in New York Stock Exchange. So, first of all, I need to pay and buy certain stocks. If I have to pay and buy certain stocks, it should be online. So that means now I need an online demat account, trading account. So you open a trading account with some any dealer. But how will I accumulate my assets? You need a demat account, a dematerialized account. So that means you are. I will just show you that particular form number where you will qualify for financial assets. So unless and otherwise the particular assessee opens a bank account outside India, a demat account outside India, a financial instrument account outside India. So I'll just show you that ITR 2. So this is your ITR 2 2627. So let me take you to that schedule number FA. So this is your schedule number FA. So here, please look at this item number 1. Details of FDA, foreign depository account held, okay, including beneficial insert. That means you are not opening it, somebody else has opened it, but you are the beneficial owner. So beneficial interest at any time during the calendar year, then I must give all this, including the peak balance, closing balance I have to give. This schedule FA is only applicable for residents. So answer to the question is only if I open a depository account outside India, and of course, if I open a depository account, I also have to open a bank account outside India. So then please look at the item number A2, A3, financial interest, immovable property, other capital asset, details, trust, any other. So I have to show the bank details also. So which will have details of accounts in which you have a signing authority. So I have to give my bank balance here in item number E. So bank account outside India is a foreign asset. For depository account outside India is a foreign asset. Okay, so these two. Similarly, how about a virtual digital asset? So a virtual digital asset is asset account is also any account which is opened outside India. So that means they are not dealers. So normally dealers of the virtual digital asset, they are governed by the Indian Income Tax Act and they have to detect tax at source. But if it is a foreign dealer with whom you have, for example, there is a crypto dealer, Bitcoin dealer, any crypto dealer who is having their office maybe in San Diego, and they are the members of various crypto exchanges across the globe. You open a bank account there, so then it becomes a foreign asset. So you have to be very, very careful. Very simple. I will give. Is there any cross border of a transaction? Does the bank Any money flows outside India, from India to outside India, then naturally you are creating a foreign asset. So this is the fundamental criteria.
Sir, I'm Thiagarajin. Good evening, sir. I have one doubt, sir. Actually, you have mentioned that if any donations paid by the company, we have to give a UTR reference number in the field. So I have a doubt if any company having a monthly donation, like monthly 50,000 donations to any charity for a 12 months means, we can add the 12 rows and give a different UTR number in the field to be filled in the field. Am I correct, sir?
Point number one, you are donating to a charitable institution, multiple charitable institution.
No, same, only one charitable institution, but the amount will be monthly basis and pay for a 12 months a fixed amount, like
Okay,
50,000, like that.
I got it.
So
I
the
got it.
different for the 12 months there is a different UTR number will come, right? So we can add
Naturally,
the different.
naturally,
So the 12 line item will be mandatory, correct, sir? Am I correct?
absolutely correct.
Okay, right. Thank you, sir.
Because because what happens is you give only one UTR, it will only connect with that one transaction number. It will only connect to one amount, and
Correct,
you
sir.
are paid for 11 months. So the system will create at the back end that there are 11 similar transactions which has not been reported. So then it will be under-reporting of maybe a misreporting of income. I will not say under-reporting of income because this is donation. It's misreporting. So very sensitive point is this.
Sir, one more value addition to your previous question, sir. So most of the brokers, for example, HDFC and all other brokers now allowed to buy the global assets, global shares. So whatever it may be. So whether these assets are, as your explanation, so whenever the money is transferred from India to other places to buy the asset, it qualify for the foreign asset.
Definitely.
Even our local brokers, we have some assets, foreign assets. Sorry, buy it some shares like Apple or Wipro or whatever it may be in the thing. We are all ADRs, whatever it is listed in the New York Stock Exchange. We buy it through our local broker. It is also qualified as a foreign asset, no?
No, 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 no. Say, I am Gopal Krishna Raju. I am in Chennai. I open a demat account with one of the depository, and
Okay.
I trade or I buy a stock from either Bombay Stock Exchange or National Stock
No.
Exchange.
These assets are bought from the other stock exchange of because these brokers, current depositories, allowed to buy the shares from the outside country, not in India. It is outside country.
For example, GDRs, Global Depository Receipts, which has been listed in New York Stock Exchange of Indian companies. So now you are resident here, you buy Indian companies GDR in New York Stock Exchange. Now here then it becomes a foreign asset. Now this is where, now the question here is how the cash flow goes. This is where the fundamental question. You are resident, how the cash flow goes. Does the cash flow, there is a cross border of the cash flow. The moment there is a cross border of the cash flow, we have to be careful. You are creating a foreign asset. So without the cross border of the cash flow, you cannot create a foreign asset.
Okay. Sir, KK Ravi Veerappan sir is having a question. Due date for tax audit for the year assessment year 2026-27. The tax audit late fee is applicable for this to the 26-27 or assessment year 27 same again. I think it relating to 26-27 or tax year 26-27.
Well, now in Finance Bill 2026, that is Finance Act 2026, this year is very unique because they have made two amendments in two laws. Income Tax Act 1961 is also amended. Income Tax Act 2025 is also amended. Now, what they have done is the concept of penalty section is actually striked down. So, whenever there is a late filing of tax audit report, we used to have a concept of 1 lakh, 0.5%. Those things have now been striked off. So you have to now forget it. So that concept is gone. Now, what is the concept? So it has now become a fee model. Okay, fee model. You are filing a late tax audit report. Very good. So they give a time till 30 days. You have the 75,000 amount. Beyond 30 days, the flat fee of 1.5 lakhs. So it's a very simple model, and they have amended. So in Finance Bill 2026 or Finance Act 2026, there are 92 amendments in 2025 Act and 26 amendment in 1961 Act. There are parallel amendments in 1961 as well as 2025. This one is a parallel amendment, meaning 61 Act also has been amended to include the fee for late filing of a tax audit report, and also the amendment was made in 2025 Act by striking off that. So this is the first time, even before the birth of a child, an operation was performed on the to be born baby. So the budget came in 1st February 2026. The new act came in 1st April 2026. So before the act was born, one section was deleted. So that section is that the late fee, I mean the penalty for filing late of tax audit report. So the question is very important question. So you can file. This is applicable for financial year 25-26. That is assessment year 26-27 is the first year. Your assessment year 26-27 is the first year where the applicability of the late fee for filing of the tax audit report will apply. And second year will be your tax year 26-27. For tax year 26-27 also, the late fee will be applicable, but that will apply only when you file it in 27. Okay, September, after September.
Actually, Uma Mageshwaran, yes, sir. SAR's question is relating to my question of shares. Whether the holding of investment in international fund of funds offered by Indian mutual fund houses like Axis, Edelweiss to be disclosed under the foreign asset schedule, even though not yet redeemed.
Okay, now this is very important question. I'm sure many are having this doubt. My fundamental question is, you are resident here and you hold a foreign asset, means how the fund has flown outside India. Has any cross border has happened? Now this is where FEMA will apply. So very simple thumb rule I will give. Has the money gone outside India to acquire these funds? This is a fundamental question. If money has not gone outside India, for example, I'll give you a simple thing. Okay. We have Gift City in India. I repeat, we have Gift City in India. In Gift City, we have a stock exchange. Now, in that stock exchange, they issue equity shares, they issue debt. But that issue of equity shares and debt will be only in foreign currency. So that means who can list in Gift City? Foreign companies can list in Gift City. Who can subscribe to that? The non-residents can subscribe to it. So it is an international exchange. Now, can a resident go and buy by paying INR? No, it is not possible. So that means you have to open a bank account in Dubai. You have to open a bank account in Singapore. From Singapore, you have to make a payment to Gift City and then buy. So that means there is a cross-border transaction. So cross-border is the fundamental. Is the money going outside India? That means you are creating an asset outside India, being resident. So then you have to declare that foreign asset. Very sensitive topic, very sensible topic also. Discuss this with your client. Note it down how he has created that asset. Paisa kidhar hai? Kaisa gaya? From your account, how the money went outside India? Does the money went outside India or money is only in India from one bank account to another bank account? Then you are not creating foreign asset.
Sir, I think in this, actually the fund of fund is created by the local fund houses. They are buying from the outsider. So money is not directly going out of my pocket and get that asset. I am buying it only through Axis and local mutual fund houses. But that house is invested in foreign. I don't think this transaction is not amount to foreign assets, sir.
No, it is not. So it is actually, you are a unit holder in a fund of fund and taking that money, they invest outside India.
Yes.
So Technically, it is only, that is why I said, there is no cross border. The moment there is no cross border, why should you worry about foreign assets?
So,
So then,
sir, in the same line, Priyambada has also asked a question. Sir, nowadays, a lot of people are trading in gold in US dollar. Will it come under foreign accounts?
Okay, so now you trade. Now, how will you buy? How the money goes outside India? For example, trading in gold in US dollar means are you are you a speculator? For example, there are three types of people. One, if I am an investor, I will hedge my investments. For example, I have a gold reserves. I have some 30 kilo of gold. Okay, so for example, I am a jeweler. If I am a jeweler, I will have some few kilos of gold with me, 50, 60 kilos of gold. So whenever there is a downward trend in price, I want to protect my profit or loss. Then I will do a hedging transaction. Now to do the hedging transaction, I can hedge it in my Indian market. I can also hedge it in foreign market. So for hedging in foreign market, can I if I am transferring funds outside India and then buying a future contract, so then it means you should hold a depository account outside India. So that means there is a cross border. So then it will come. Instead of that, there is only, you are only a speculator. I repeat, you are only a speculator. There are so much of foreign markets. You take a position, you close the position. The difference only you pay in INR to an Indian, the local account who is only a dealer here. I repeat again. You want to take positions, buy and sell positions. You want to close it. You are not taking a delivery. Why? What is called as trading in gold in US dollar? You are not taking delivery. You only want to make profit out of the swing. I repeat, profit out of the swing. Now, when you want to make profit out of the swing, loss also will happen. Now, profit will be paid to you by whom? Loss means you will pay the loss to whom is the question. Profit will be paid by a local dealer to you. Loss means you have to pay the money to a local dealer. Both are in INR. The moment it is an INR transaction, you are not covered under foreign accounts.
okay, sir, Mr. Madan, TG, where do we show gift received from relatives?
Oh, good. We have
The
now
answer
I
also
want
is there, sir. Income from other sources.
no, no. Actually, I have to make one observation here. Very important observation. Two things, sir. Under section 56 of the Income Tax Act, gift from a relative. Now, up to 1961 law, relative means a linear ascendant and descendant only is applicable. From 25 Income Tax Act, lineal ascendant and descendant within bracket, paternal and maternal they have included. So now, in case you are receiving the gift from your father, grandfather, and all, your father's side, then that gift is actually tax free. Actually tax free. And you have to show it in a schedule called Schedule EI. I repeat, Schedule EI. Now I'll just share with you that particular schedule here. Please look at this is actually your ITR 2 2627. This is your schedule FSI. You have PTI, and this is EI. Details are exempt income. This is your interest income, gross receipts, other exempt income. So here you will be mentioning about that gift part. So what is the gift you have received? But actually in income from other sources, in case you have received the gift from your friends, up to 50,000 cash gift is not taxable. Up to 50,000 the gift in kind is not taxable. So please look at this part. So this is your income from other sources. Okay. This is your income from other sources. So your dividend, interest part, C is your rental from machinery, D is income from nature of 56 to 10, which is chargeable to tax. So here your gift part is aggregate amount of money received without consideration. So here you will mention that part. Okay. These are all the movable property and immovable property part of it. So if it is cash gift received from a non-relative, you will put here because and never jump to a conclusion that 50,000 is an exemption. 50,000 is a Lakshman Rekha. You receive 51,000 from your friend, maybe friends and during a birthday party. Entire 51,000 is taxable here. So maybe in a year, if the amount doesn't exceed 50,000, then you can put that in Schedule EI. So you have to be very, very careful with respect to the gift part. So all these are gift only. The D part entirely is gift.
Nadraj Lakshmadi sir, understand that ITR 1 cannot be used if an individual has share in private limited company. Then should Form 2 be used if there is a income from the private limited company?
Sir, I didn't get it. This is Uma Mahesh. Whether the question is above Uma Maheshwaran and below that?
Below that.
Below.
Sir,
Natraj,
ITR
okay. Okay. Natraj Lakshmipati question.
Nadraj Lakshmadi, yes.
Understand that ITR 1 cannot be used if an individual has shares in private limited company. Correct. Then should Form 2 be used? Yes. If there is no income from private limited company, can ITR 1 be used? Oh, good question actually. So naturally, you don't have an income, so you don't disclose that. Maybe if my view, so because there is no necessity, you have not earned any income there. So your view is correct.
Okay. Vijay Stephen, actually, he's praising you. He's a student, actually being your universal teacher. So it is not surprised that your students are attending the seminars. The schedule for exempt income assessment year 26-27 has dropped down relevant to specific section. Until the last year, it had a miscellaneous column for exempt income. How to fill in exempt income not covered under the specific sections of IT Act?
Well, actually, year by year, they are making it. I will not use the word called complication. I'll use the word they are more specific. So that, see, people in South India, they are very much law compliant. But unlike other than other places, so they want to ensure that you give genuine data and correct data. So that is why they are asking all these minute details. Anyhow, you have that other line called others is there. So you can put in case you don't have a specific section number applicable for that.
Sir, a lot of people now to trading in gold in USD. Will it come under the foreign accounts?
Sir, again, question. Who's asking this question?
Priyam Veda.
Priyam.
I think this question is asked by our.
Already this question.
Already it is discussed. Yes. Proceeds from life insurance policy, Mr. Arun Prasad. Question. Proceeds from life insurance policy in which TDS under section 194 DA was deducted. Whether ITR 1 or ITR 2 is applicable.
Okay, so now you have got maturity of your life insurance policy. Okay, so now this income is actually an other sources income. So therefore, you can even file it in ITR 1 itself.
Okay. For financial year 24-25, NRI financial year 25-26 resident can Form 1 be filed?
Yeah, definitely. The moment you are a resident, you can file. So you are having salary income, property income, house property income, or other sources. You can file Form 1.
If director has resigned and has filed DR 111, but the company yet to file DR 12, does this require to be disclosed as director in that unlisted company? This happens during the financial year 25-26. This question is from Vijay Raghavan. Actually, he resigned, but company is not filing the DR12 in MCA portal.
Actually, see, these are all the secretarial part of it. See, I am an income tax officer. I'll only ask you one question. During the year 25-26, as director, before resignation, have you earned income as director's remuneration? Yes, no. இதுதான் கேள்வி. So then resigned, they have not filed. இதெல்லாம் வந்து these are all the Companies Act and secretarial practice. Have you earned income as a director? Yes, no. You have not earned income as a director or resigned, then this is one. Actually, there is no tax impact. So therefore, whether I should do it 1 or 2 doesn't matter at all. Okay. If income is there and you are a director, one not applicable. Samachar. Oh.
Sale of rural agricultural land is reported. If yes, where it should be reported? Raghavan or
Well, this is actually an agricultural income because it is a rural agricultural land and it is not in a specified area. So once it is in a specified area, it becomes a taxable income. So once it is an exempted income, you can directly show it in your Schedule EI itself. So Schedule EI. Schedule EI is actually a saver for the assessee. I repeat, Schedule EI is a saver. அது வந்து life saver because if somebody actually forms part of the raid and some cash is collected, they say, no, 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 it belongs to Gopal, Krishna, Raju. This 78 lakhs belongs to him. Hey, how for 78 lakhs have you disclosed it? Yes, I have disclosed it in my income tax return. Please see my Schedule EI. So Schedule EI will actually be a saver. Those time when, so, no, no, it's only not taxable. Why should I declare? Okay, so be genuine. Let the assessee be genuine. Let the assessee be reasonable. Whatever income he has earned, let him declare. So, it is actually whenever I take the Indian accounting standard session, I used to use this slogan. So, business is first, accounting next, disclosure is must. So, in the same model, so if our income tax return, income is first. Do you have an income? Then only income tax return will come. No income. Where is the question of filing income tax return? Because about 2.5 lakhs only question will come. So no income. So income first. So then disclosure is must. So wherever you have not taxable income. So there are people who say, no, I have only agricultural income. So should I have to file the income tax return? Actually, people earn agricultural income, accumulate asset, net worth, and they let that income, they let that asset get rental income. So that means how the income is, how the asset has been accumulated. So over a period of time, you file the income tax return. Actually, even for those agriculturists, some of the agriculturists they send their son or daughter outside India for studies. Now this agriculturist has to go to the embassy to get a visa. Now to get a visa, fundamental document is he has a land document. He is doing agriculture activity. He has income. He has an income proof. So he is an agriculture. He does agriculture activity. What is income proof? Income tax return. So better always, even if it is exempted income, let them fill it up.
a few more, almost another 10 questions nearly is there. Another 5 to 10 minutes is there, sir. We'll
Yeah.
rush up the things, sir. Sir, if we acquire foreign asset from funds earned outside India for the resident, is Schedule FA is applicable.
1 minute. Sir, which who is asking this question?
Yashwant Bangani, yes, absolutely.
Yes. If we acquire foreign asset from funds earned outside India for a resident in Schedule FA, yes, definitely. So, for example, you have retirement fund account. So, and you have a fund outside India. From there, you buy a foreign asset applicable. Resident, you have a foreign asset. Even you don't have an income, but you have a foreign asset. Declare. That is fundamental. Okay. That rest the case. So you have to disclose.
Sir, if an individual has more than 2 house property and can be file ITR 4 as he has some small business income also.
Yeah, he can do. Definitely. Yes.
In this context, a company like Facebook issues ESOP, Meta shares in the company. Will this require disclosure under FA?
Okay, so he's a resident and he gets ESOP of a foreign company. Actually, a very important question by K. Gopalakrishnan. Many of the residents, they actually work for Indian company which have subsidiary outside India, and in their salary package, maybe they go for a foreign project, they come back and sit in India and work. And during their projects, they would have been committed that ESOP will be given. ESOP is also granted. Now, ESOP is actually a foreign asset. So maybe you have given a ESOP in a foreign company. You are now in India. Now you have to disclose that. Very important question. I think very important point brought out by Gopalakrishnan. So you have to disclose. The resident who have worked elsewhile being a non-resident. At that time, he has got an ESOP. Now he is a resident. He has to disclose it.
Mr. Ajay Malik, if I received a gift of USD from my son and invested in shares in US, is it to be shown in the foreign assets?
Yeah, definitely. So that's actually technically not a cross border because, for example, your son is in US. So say he is in San Francisco. So he has opened a father's account. So you have so he transfers his money to your account in San Francisco. Maybe when you went there, you open an additional account there, and you open a demat account also. From that account, from New York Stock Exchange, you bought a few assets, few company shares. So Elon Musk company shares you bought. It's a foreign asset. So therefore, you have to disclose here. So source, you have to have a proper accounting that under Income Tax Act, gift received from a son is not taxable. Okay, so therefore, you need not worry about it. But disclosure is mandatory.
Mandate. Sir, Priyanka Ramasamy, long-term capital gain under section 112A is below 1,25,000. Which ITR will apply, whether the ITR 1 or 2?
Wonderful question, actually. Actually, if your long-term capital gain is below 1 lakh, for example, it is 1,20,000, monthly 10,000 you made a gain. You are a salaried assessee. So, salaried assessee, yearly for, say, monthly 3 lakhs. 3 into 12, 36 lakhs. You have made a long-term capital gain of 1,20,000, ITR 1. Because in ITR 1, you have a separate line. Up to 1,25,000, you can show that. So, you need not, because there is no tax impact, technically no tax impact, so therefore you can show it in ITR 1 itself. Only if it crosses 1,25,000, then there is a taxable capital gain. For on that, the concessional tax rate is applicable. So you cannot show that part in 1, you have to go to ITR 2.
Sir, in this relevant, instead of ITR 2, I filed ITR 1. If showing this, in this case itself, if my capital gain is more than 125 or 130, 140, whatever it may be, I've wrongly filed, it means it is invalidated the return.
No. Actually, ITR 2 is a safe bet. I will say ITR 2 is a safe bet because nothing wrong. So ITR 2, I will say encapsulate ITR 1. So ITR 2 includes ITR 1 content. So therefore, nothing wrong in it.
Okay, if we have borrowed money, as Mogana is, if we have borrowed money from a friend in a foreign and using it for marriage expenses, etc., does that borrowal is treated as income? How should it be treated? Whether ITR 1 or 2 have to be used?
Point number 1, Mohana, you have mentioned it that it is a borrowed money. So borrowed money is not an income. So therefore, question of declaring that as an income doesn't matter. So no need to worry. But please be careful that you return that money properly.
B.S. Kumar, while filing the Form 10E online, if current year income includes a long-term capital gain, taxable at special rate, how to fill the current year income, including long-term capital gain or without long-term capital gain?
I think the question is not clear. Maybe we'll ignore it. We'll go to the next question.
Okay. Having income from salary along with domestic equity shares, income which filing record to be filed ITR 1.
Having
along
income
with the
from
domestic
salary,
equity
along
share.
with domestic
Having
equity.
income
I
from
think he
salary.
says we have a long-term capital gain from selling equity.
Ah.
Which form is applicable? Actually, if your long-term capital gain is below 1,25,000, no tax. So then 1 is applicable. If your long-term capital gain is above 1,25,000, 2 is applicable. If you have short-term capital gains, 1 is not applicable, only 2 is applicable. I repeat, if you have short-term capital gains, even if it is 1 rupee short-term capital gain, 1 is not applicable, 2 only applicable.
Okay. Tax deducted before 31/3/2026, but salary not received. How to treat such income?
That means you have, because there is a charging section, section 15 says, salary is taxable on accrual or on receipt, whichever is earlier. So that means January, February, March months, you have worked, you have actually given your service to the employer, it is accrued, TDS is deducted, it is paid, but salary is not paid. You have to pay tax. So because service is already rented. So salary is chargeable on receipt basis or an accrual basis, whichever is earlier. So it's very maybe very difficult to digest this part from a employee perspective, but that is the reality.
Sir, please take one complete session of foreign asset disclosure, more specifically on ESOP and thing. Sir, definitely we'll arrange in the future, sir. Kindly share the PPT. It will, where to show the proceeds from unrecognized PF trust for an employee who served less than 5 years in service in the new ITR.
Well, it is actually an income. So, for example, unrecognized provident fund, any income, you have actually four parts. So, one is your contribution, you are taking it back. So, therefore, it is not an income at all. On your contribution, you get an interest. So, that will come under income from other sources. Employer contribution and employer interest, both this will become your income from salary. I repeat, your PF has four parts. Your contribution, interest on your contribution. Your contribution, you get it back. So therefore, there is no income. Interest taxable under other sources. Employer contribution and interest on employer contribution, both are taxable as a salary income. Right.
Krishna and Raghavendra, a partnership firm is discontinued its business and has rented out the premises and receives only the rental income. It continues to be partnership firm. Can it set off the partner's salary and interest against the rental income?
Partnership firm has discontinued its business and has rented out its premises and receives only rental income. Okay. It continues to be a partnership firm. So can it set off the partner's salary and interest against the rental income? Yeah, it's an expenditure. But only thing is, it is salary and interest is a deductible expenditure under business. Please understand, salary and interest is a deductible expenditure under business. The moment you say rental income, so unless and otherwise your business is you have more property and you let it out as a business income, then salary and interest is deductible. If it is only one property and you said you have discontinued business, that means no business. So your asset you are only earning it as a income from house property. Income from house property doesn't have a deduction as interest on salary. So therefore, unless and otherwise you are a property company and you have an accumulated surplus of property, so and that you get a rental income, that is your business income, then it is possible. Otherwise, no.
Whether partnership firm benefit or private limited, which is best, sir?
It depends upon your business.
It is general question.
Then
Sale of rural agricultural land, whether net or gross is to be declared. Sales consideration minus cost of purchase.
yeah, naturally, capital gain only has to be declared. Capital gain is your sale minus cost of acquisition.
Sucharita KV, will LTCG to be absorbed against unutilized exemption limit? Will this be done automatically while filing? Gross total income is only 1,50,000 and long-term capital gain is 5 lakhs.
I think we are not clear with the question.
Yes. In case of ESOP grants are received, is it necessary the employee should have worker abroad to treat it as a foreign asset or even working in India?
No, see, ESOP is actually, if it is given by a foreign company, for example, there is a Cognizant, they have a subsidiary outside India, and people go on a project, they work in various countries, and as an incentive, they will say, we will give you ESOP in a foreign country. So sometimes even the various other, they will be already work, they would have already worked in some other foreign country also, some other foreign company also. So ESOP they would have been granted. So now they have come back. So unless and otherwise ESOP has been granted by a foreign company incorporated outside India, and after getting the ESOP he is settled in India and he is resident, it will become a foreign asset.
Mr. K.R. Babu, land sales and long-term capital gain, building is a short-term capital gain. May I disclose as a long-term capital gain or separate both long-term and short-term?
No, it is when you read the capital gains chapter, it is mentioned like this: land or building or both. So it doesn't mean that the land I bought it 10 years back. Building I only constructed 1 year back. So it is not so. So the moment you have constructed a building on a land, can you separate building and you separate land? No, I will take the building separately. It is not possible. The moment you construct a building on it, the building also will take the character of the land. If you have been holding it for 11 years, building you only constructed 1 year, it means the asset you are selling as a 11-year property. 11 year is your, so you have to, only
The
thing,
more than
building,
that, carry on, carry on.
yeah, only the building will be treated as your cost of improvement, and only for the improvement portion alone you will be eligible for the indexation. Even
Exactly.
now, that part is also now gone. So that is where you have to be careful about. Good.
I had only purchase US stock. How to declare it in ITR form column?
I had only purchased
Purchase.
purchase. How to declare ITR form? If you are resident, then you have to show it in your foreign deposit account. Okay.
There is a single transaction of loss of rupees 1 by way of purchase and sale of a single share by way of day trading. All other transactions are only investment in shares for more than 1 day. Will ITR 3 be applicable?
No, 3 is only for business people. Okay. So are you doing business activity by it doesn't looks like a business. So therefore you can you can file in ITR 2 itself.
Raghavendra Vinod, if a firm is applicable for audit, then what is the due date for individual filing of its partner?
Now the audit means you have a due date as 31st of July. Sorry, 31st of October. So for example, tax audit is applicable. So tax audit applicable means the due date of filing of ITR is 31st of October. For partners also, 31st of October will be the due date of filing.
Is the disclosure of foreign asset not applicable for resident, but not ordinary resident?
See, and section 6 of the Income Tax Act very clearly says resident but not ordinary resident is also a non-resident only. So therefore, disclosure of foreign assets in Schedule FA not applicable for not ordinary resident and also non-resident. It's only applicable for resident.
Okay. Good evening, sir. My client is document writer. She getting money in his account from property buyer or seller for registration fees, stamp, paper, and other online payment. She will make online from his account. Is it correct or wrong? We will consider 5 to 10% commission amount for his annual income.
I
So
think
actually, his document writer is collecting the money from their client for paying the money to the department, all registration charges, all those things. Whether his account is, whether it is correct. The first question.
no. This is not the way they have to do it. So you have to, if you are collecting for so many other expenses, you have to only open an account called client account and collect it and make the payment. So your money, you have to, your fees, you have to receive it separately, and
Separate.
expenses should be a client account. So never mingle this. This will become a very, very serious thing. Will receive a question means you will be in a soup. You have to actually explain with explanation and documents how this money belong to the client. Otherwise, the entire money deposited will become your income.
There's so many questions is there, sir.
So I think paucity of time we can defer it, or we'll take this in some other session. But I think
we'll take it in some other session, sir. 1 or 2 questions means we'll answer, but we have more than 10, 15 questions.
Yeah.
So there are more questions offline also, sir. People have mailed through SIRC website. There are more questions.
Oh, wonderful.
Okay. So we will have a separate session for only Q&A session, sir. We will
Yes, sir.
have one Q&A session. It is better.
Actually, more than 600 members were registered and around 400 participants have joined today's webinar, sir.
So all credit to SIRC and to the
Arun,
chairman
sir.
of the Direct Tax Committee.
Okay.
No. Sir, thank you, sir. Thank you, GK, sir. As usual, you rocked the session and the clear explanation with the practical forms. So definitely it is very much useful for the practitioner. Practically, definitely when we go for a practical implementation, we will have more doubts. So we may have at the nearing the filing date or 1 or 2 days then and there, we'll have one question and answer session. because I got suddenly I got this idea while a lot of people are asking. So we'll have a one question and answer session. Definitely,
Yes.
this entirely for have one or two panelists also. So then it is very interesting to have a
Yeah, in the meantime, I can
very
drink some water. The other panelists can answer. When they drink
Yes.
water, I can answer.
Yes. So because it is not possible to answer one speaker for so many questions continuously, So ask that is why. So definitely, thank you, sir, and thank you, Raghuman, for coordinating this program. So
Thank you, sir.
definitely, so we will have many more programs for benefit of the member in coming days. So thank you all for your participation and our speaker, today's speaker. So thank you all.
Yeah, thank you, sir. Thank you. Sir, I take this opportunity to seek the concurrence of our speaker, GKR, sir. We have recorded this video, sir. With your permission, shall we upload in the SIRC YouTube channel for the benefit of members at large?
Definitely.
Yeah, yeah,
Thank you,
yeah.
Gopal.
Thank you. Thank
Thank
you
you.
very much, GK sir, for taking up all the questions. Thank you, Arun sir, for formulating this program. So no worries, members. All your questions, we have a separate question and answer session. We will definitely take up all your questions. Even now also, we will copy paste all your questions. We will try to escalate it to GKR sir and get it answered. Okay, no worries. Sir. So thank you all for your valuable time, participation, and excellent questions. Until we meet again in the next program, good night from all of us here. Thank you.
Thank you.